Good morning, ladies and gentlemen, and welcome back to Casual Cash on what has been a very abnormal day and week. I typically say what I mean on these videos, and very often you'll have heard me say that we share all of our profits, all our losses, all of our purchases, and all of our sales. And can I tell you, this week we have made a lot of sales, and I think you might be able to guess why. But if you haven't yet, we're going to go into what's been happening in the world and why we chose to sell 100% of 7 of our shares this week, and what the pros and cons of the decision would be. Without delay, let's get right in today's episode. We might all like to think that the shares and stock markets of the world run on numbers. Deep analytics of price to earnings ratios, net asset values, great management teams delivering on cost savings and hedgings against currency devaluation. And yes, all of those things are absolutely true, but what really dictates the price of shares in markets is supply and demand. Simply put, regardless of the numbers, if more people want to buy a stock than those wanting to sell, the price goes up. If more want to sell than buy, the price goes down. A great real-world example of this is Capitec Bank, and when in 2018 the short-selling firm Viceroy, who correctly predicted the demise of Steinhoff at the time, released a report claiming that Capitec was a house of cards and would soon collapse like Steinhoff did. This spooked investors, and one after another they sold their shares, and sure enough, within 2 weeks of the report, the bank's share price had dropped by nearly 20%. Nothing in the business of the bank had changed, but public fear and the share price showed it. Once that report was disproven, Capitec's share price went on to finish the year 35% higher. Now the point of this is that in uncertain times, fear and greed can often dictate how the market moves. But what has that got to do with us selling 7 of our shares? Well, let's bring it forward to this morning, where the markets opened. I woke up and I opened up the news to find articles like this. After weeks of tensions, dialogue, and interactions by all of the major world leaders, Russia has taken the fateful step and launched an invasion into Ukraine. Now, I'm not a foreign politics expert, and I can't claim to know all of the history and the reasoning behind this attack, but you don't need to be Anderson Cooper to know that this is a very bad thing for the modern planet, and as you may have guessed, the world markets. So while it's not certain yet what this means for the world, what does this immediately mean for your investments right now, and what did we sell as a result of this news? Simply put, uncertainty almost always equals fear. Right now, these attacks will prompt economic sanctions on Russia from many of the world powers, but as for the next steps, well, we would need a crystal ball to see. Some of the thoughts are that the world trade would be interrupted and all of Russia's raw materials and natural resources would be halted as a result. This would include, most importantly, their oil, leading to fears that prices would continue to rise around the globe because of supply shortages. Of course, the worry is also around what the physical reaction might be and whether this may prompt further military action and maybe even war from most likely the northern countries. Now, both of these scenarios would cause major interruptions to the world economy, and especially the US and Europe, who are allies to Ukraine, along with NATO. But if you're wondering what this means for South Africa, well, there's a saying that when the US sneezes, the world catches a cold. While we may not for now be directly involved in this conflict, we are a part of the global trade network and may be affected by the fallout of the conflict. Okay, but now let's look at the other side of the coin. It's not clear yet now how this invasion will play out. It's possible that it may be over soon, although unlikely, and perhaps all will be resolved. But even if it is not, South Africa seems set to be far removed from this conflict, and although global commodities prices do affect us, our normal daily trade won't likely see as much effect as those directly involved, and earnings of our largest top 40 companies are unlikely to see much impact. The problem that we will have in South Africa is that of fear. Already we can see retail and institutional traders offloading their shares because of the fear in the air, and that fear and instinctual selling will definitely influence our markets, and we've been seeing that this week. So what do we do? Well, I can only tell you what we have done, And luckily, I tend to check the news in the morning, and when I saw that Russia had taken the step to invade, it was about 8 a.m. before markets opened at 9, and I was able to make some decisions, and below are those decisions that I made. As you can see, I decided to sell all of my international stocks and only my international stocks, those that would be most affected directly by the effects of this conflict. Luckily, I was able to get the sell orders in on time, and the sales took place about 17 minutes after the markets opened. I did get affected by some price drops in those 17 minutes, but I'm willing to absorb those as the market continued to see further drops in the day. So why did I sell these stocks, and what are the things that you need to consider? Now, I usually like to put together a portfolio that is, for the most part, risk averse. I make use of diversification across industries, across the world, and I also keep good portions of my investable money in interest-bearing accounts as cash, with only smaller investments that are riskier in nature. So no one is perfect, but I try to follow the words of Warren Buffett when he said, "The first rule of an investment is don't lose money, and the second rule of an investment is don't forget the first rule." So I withdrew my money from international funds, mostly based in the US, to lower my exposure to an uncertain situation. As time goes on, I can monitor what's happening around the world and see when is maybe a good time to start putting money back into international markets and maybe buying at a good entry point to make some gains. On the other hand, this may all be over soon and I wasted some trading fees, but it's up to you to decide what might be best for your investments. But the exciting news is now that we have a war chest, so to speak, of new capital sitting in our accounts, and over the coming year, we're going to see where is the best place to invest it in line with our investing goals. So stay tuned to the channel to see what we uncover. So that's it for today's episode, guys. If you have any questions, preferably on markets and not Ukraine, you're welcome to ask them below and I'll try to answer. But until then, I'll see you in our next episode where we review ways to invest automatically right from your phone app. And until then, I'll see you next time on Casual Cash. Cheers.